better on how we behave, what are the reasons behind our decisions or lack of decisions, and as much as I could to try to be open and transparent on what drives us and what what we are looking for. Okay. Very briefly, my name is Jose Martin. I co-manage a fund called Cabiedes Partners. It's a sort of angel fund. We don't want to be considered a VC fund. That's too strong word for us. We are very much investors in the ventures we take part of. Actually, I have the pleasure of being able to invest a third of every dollar I invest is my own family money. So I'm much more closer to a BA guy than a VC guy. Actually, sitting kind of in the middle between the two, and that's why we can actually start by being more as a sort of business angel, and we have luckily enough dry power to become more and more VC as time goes by, and be more involved and more exposed into the companies that we invest upon. And that's sitting in the middle, I think is very interesting for you guys to be able to ask anything that relates to business angel, and as much as I can, anything that relates to venture capital. We have been doing this for already 16 years, which is a lot. That's why I don't have too much hair, or certainly less hair than you guys. And we have invested so far probably, I don't know, I have not counted, but certainly more than 60 companies. As you can imagine, our failure rate is quite high. If we think about failure as non-success, then it's 80%. But that is not how we see it. We see our investments as a pool of options into a bright future. Unfortunately, only 20% of those options that we invest upon become in the money and provide us with a relevant return on capital. And those are the ones who need to pay for all the option premium. So that's how we behave. Okay. So that being said, all open to you. Let me know what would you like me to talk about, and happily we'll try to do it. Do you moderate? Charo, do you want to moderate, or how do you want to go about it?
No, I think that is better if would you like to do a question, any doubt, or
yeah, let's start. I mean, who wants to learn a little bit more about us, and what would you like to learn? I mean, let's put it in these funny words. All that you would have loved to know about sex, but you were not able to ask. So now is the time to ask, instead of sex, about the VC investments.
yeah.
Go ahead.
Yeah. I want to know what is the main the critical factor you decide to invest in some company.
Okay. Let me turn a little bit the question, because we are always asked many times about what are the critical factors. We see it differently. What are the factors that need to be present, but that are necessary but not enough? Essentially, in the due diligence process, or in the process of understanding a new potential investment, what we need to understand is that everything is perfectly realigned, and only if there is any small minor issue that is not, then we tend to pass on that investment. It sounds strong, but I wanna be clear to you guys. We are exposed to hundreds, if not thousands, of investment propositions on a yearly basis, and therefore it's not that we are looking for XYZ. We look at everything, and as long as there is any single issue that is not optimal, then we say no. Now, that being said, there are three main blocks of elements that we will be looking at when analyzing a company. The first block and the starting point is the financial viability of that company, meaning your unit economics and to what extent what you are deploying is a reasonable business case. Okay, it sounds very simple. It sounds almost basic, but you wouldn't imagine how many times an entrepreneur is not able to tell us what does it sell. Meaning not a service, blah blah, but specifically what does it sell, at what price, to who, at what price of capturing that client, at what is the production price of that, and if the net effect is positive or not. As long as the venture that we are analyzing is not able to deploy a reasonable financial viability or a reasonable financial context of what he's trying to do, and to what extent the costs are lower than the income, that may not be a project for us. Okay. That being said, I think the Spanish environment and the overall investment environment is now prone and capable of investing in models that are not that do not have a financial model behind. I think that's great, and that should be the case, but we are not playing in that field. We play in the field of financially reasonable and financially understandable business models. Okay. Very basic, again, what we call the unit economics, the unit cost of all you do. Okay, it needs to be positive. That is the starting point, and then we will build on that on issues, very simple issues regarding competitive landscape, what are the market forces, what are the incumbents in that market, what is expected to happen at the incumbent level, what are your competitors doing, what should be expected in terms of market forces, very basic Porter forces, if you will. Okay. That will be the first building block. The second building block has to do with the feasibility of the model, and that is much more related to the team and to the timing. Essentially, we would like to invest in teams that are clear to be the best ones in doing that, because they are not going to be the only ones doing that business model. They never are. There is always competition. There is always another team somewhere else trying to do the same, trying to capture your own market. And you need to demonstrate that you are the best one in doing that. That has to do with your previous experience, your networking capabilities in that field, your capability to show that you are mastering the basics of running a business, things like that. So we don't invest in pure technology plays, we invest in business. And business are run by businessmen, they're not run by technical guys. And we need to have a very, I would say, a very strong foothold on the business capabilities of the team that we are investing upon. Okay, it is from time to time a little bit challenging for an entrepreneur to see how we are not as good as analyzing the product as we are as analyzing the balance sheet and the P&L account. As we say, we don't invest in products, we invest in P&L accounts, and P&L accounts are run by business people. So we will put a lot of emphasis on what is the business background of the people we are talking to. And then the other feasibility element is the timing. That's a very tough call. Getting the timing right is close to impossible, I may say. And that is probably the reason why we need to invest in many to get a few winners. And that is something that is not in the hands of the entrepreneur. It is in the hands of the entrepreneur and us to analyze the correct timing environment and why now is better than has been in the past to launch this business, and why now is better than maybe in the future to launch this business. But timing is a very elusive animal, and I think we are all exposed to timing errors. And as I said, that's probably the reason behind many of our non-successes. That is the second building block. So the first one was viability, the second one is feasibility, and then when all that is realigned and makes all the sense, and we have seen those two premises from many angles and from all over the place, then we go back to our own office, as the one I am now, and then as an investor we make ourselves the third big question, which is to what extent this model, this project and this team is investable by me, okay, by Cabiedes Partners in this case, which means that or calls for to say that in many cases great viable and feasible projects are not investable by us, but they are investable by someone else, which on the positive side can be seen as a way not to get very discouraged if an investor tells you that it's not going to invest in you. If an investor tells you that it's not going to invest in you, it's not necessarily because you are not a good project or a good team, it's probably because it's not a good project for them, as it may be the case from time to time on us. And in order to sort out to what extent XYZ project is investable by us, we need to understand what is the capital intensity of that business model, to what extent we understand that business model. There is a question that I love to make always is, what are your key KPIs, and to what extent I can understand those KPIs and those KPIs are familiar to me. I would not invest in a business that is exposed to variables that I do not understand and I do not control. And obviously, I'm not I'm not the most clever guy on earth. So there are many investors that are much better than me in investing in models that I don't invest upon. And that doesn't have to say that they are not good models, as I said. No? So models need to be understandable, needs to be investable in terms of sizing, in terms of stage, in terms of geography, in terms of several other issues by the investor, in this case by us. So that is the third building block. So first one, recall, is viability. The second one is feasibility. The third one is to what extent is impossible by me. And only when the three stars realign, which is not very often, is when we start considering investing into a venture.
That's it.
What else? Go ahead.
Hola. Quería preguntarle dos set of questions. Sorry. Sorry, Jose Martin. I'm gonna ask you like two set of questions. Like the first one, I didn't get how much you guys have invested so far. So I wanted to understand like how much you invested, what is the average investment and the average sales cycle for you to close a deal. And then if you can tell us a bit more about the financial, because you mentioned P&L and balance sheet, but what is the horizon for a company to provide you like significant amount of data? Because if you are analyzing balance sheet and P&L, probably need to have at least 1 or 2 years of recurring revenue, right?
Okay. First of all, regarding Cabiedes Partners, I co-manage two funds. The first fund is Cabiedes Partners 3 because it's my third investment period. The first two were done only on a private basis by our family business. The first public, quote-unquote public fund is launched in autumn 2009 and starts investing in 2010 and does invest in 2010, 11, 12 and 13. That fund has already closed its portfolio of underlying companies, although it still has a reasonable amount of capital to invest. That fund was 25 million big and has only deployed so far 16 million, meaning that we still have, as I said, some firing power to keep on funding on the companies that are on that portfolio. But we cannot incorporate new companies in that portfolio. In order to keep on investing and incorporating new names to our horizon, we did launch a fourth fund, which has been running for 2014 and 15, and it will go into 16, 17 and 18. That second fund is 35 million and has already invested a 10, so 3.5 million. So still a long way to go. Now that would call for us making big investments, and we don't. We take a phase approach to investment, meaning that yes, we can invest a couple of millions in a company, but we will never do that until we have full conviction. And in order to get full conviction, we first invest 100,000. Then from time to time it may happen that we invest 500,000, and it rarely happens, but it does. We may invest 1 million down the road or 2 million in that company. The reason for that is very simple, it's risk management. Okay, I mean, don't quote me bad on this, but I don't truly believe on due diligence. I think again, you guys are way more prepared, knowledgeable about your business models and clever than us. And you can convince me about many things that I shouldn't be convinced of. So from time to time I make a faith action, and I trust on an entrepreneur, but I will only give him 100,000 euros. From that point onwards, there is no trust. It's only figures. It's only reality. It's only facts. Okay, and facts are simple because they are not open to discussion. If after that 100,000 euros investment the company goes nicely up and requires a reasonable amount of capital, would be the first ones to want to deploy that capital, and we will be signing a, 500 million euro check. Okay, that happens, let's say 40% of the times of those that we invested 100,000. So we have a mortality rate a little above 50% in that process. After that 500,000, the company explodes and is an outstanding company, as has been Trovit or BlaBlaCar or Privalia. And then we are then and only then ready to deploy a relevant amount of capital, meaning more than 1 million. And that's why we preserve a lot of capital to be deployed only in certain cases that are, let's say, a tenth of those that we initially invested. that are completely outstanding. So we should be ready to deploy outstanding amount of capital, but only in outstanding models that have proven, and I stress the word proven, to be explosive. And as I said, we only make an act of faith once. We do it from time to time, let's say 10 times a year or 12 times a year. From that point onwards, our relationship with our entrepreneurs are not faith-based, are purely factuals. And I mean, the beauty of numbers is that numbers tend not to lie, okay, and tend not to hide anything. Numbers are numbers, and we all understand about it. So your second part of the question is, if I am looking for a P&L and a balance sheet, then I should be waiting for 2 years. That's not necessarily the case. I do need some flow into the P&L account, which means that I tend to invest in companies that have clients that are paying clients, and not users, but paying clients that have validated the business model. So I need validation of the business model, and the best way to get validation is to get sales. Okay, there is no better way to validate your model than to sell it to real clients that open their wallets. So we do look for companies that are already trading with their counterparts and trading with their clients. Now, it's not that I need XYZ amount of revenue. It's not for the monetary value. It's only for the validation concept that a real true P&L brings into the table. Okay, that is not necessarily with the balance sheet. In terms of balance sheet, we look much more on a projective basis, or looking into what are the capital needs of these models, and those are key questions when we talk about, for example, backward integrated e-commerce, where you need a relevant amount of inventory capital, or you need working capital to produce that good that you are selling. That to us is relevant, because we want our money to be spent in growth. We don't want our money to be buried in inventory or buried in machines. We want our money to be spent in creating market. Okay, so the extent of the heaviness, if I may say, or the capital intensity in the balance sheet that we can project is relevant for taking the decision, and that has to do very much with the investability, or to what extent this model is investable by me, or is investable by a guy who has a much bigger shoulder than me, who can put the inventory, can put the machines, or can put the whatever. For example, that is very relevant in the case of fintech, a sector that, by the way, we are very keen of and investing very heavily. There are certain sectors in the fintech space where we simply don't feel comfortable about investing, because we understand that a lot of capital will be required until that model is viable. And I mean, we're big, but we are not huge, and I cannot deploy 5 million into XYZ before knowing if it goes anywhere. So we need relevant, viable, feasible, and investable models that are capital efficient, or that are balance sheet light, if you will. And that, when you understand the models, you tend to think to what extent that capital is going to be, that balance sheet is going to be heavy or not. Okay, so P&L account needs to be factual. Balance sheet, we can envision what it's going to be like in the future.
And so, just follow-up question. So, how many months would you need to get like a solid idea on a P&L? So, like a P&L of 3, 4, 5, 6 months is okay, or you require specific?
I mean, this is not about box ticking. It's not that 5 is okay and 4 is not. I would say, figures need to be statistically significant. I think it has much more to do with the variability or the volatility of the variables. Okay, I want you to be able to feel comfortable with your customer acquisition cost, to feel comfortable with your margins, to feel comfortable with your pricing. Okay, if that takes 2 months or 18 months, I don't know. It depends. Essentially, when your variables, your key variables of the unit's economics are stable enough, I mean, do not move more than, I don't know, let's say 20% on a monthly basis, up or down, then is when your model you start to feel comfortable and stable with your model. And I think only then is when you can look and search for money. Not only for me, but you shouldn't be looking for money before that, because you're honestly not knowing, you don't really know what you're going to use that money for. So first stabilize the model, no matter the size. I don't want P&Ls to be big, but I want P&Ls to be a little bit stable when we invest.
Thanks.
What else? Go ahead, please. Oh yeah, better.
Do you hear me?
Yes, much
Okay.
better.
Okay, I want to know your point of view about the valuation of the company, which is a good valuation for you, because this is very different from company to company, and I want to know how the investors think about when some people present the company too high or too low, or I don't know what
Yeah,
advice
okay.
do you
Don't
have.
don't quote me wrong on this, but at least on the first one, valuation is quote unquote irrelevant. Okay, meaning that I'm not exposing my fund in a very relevant way in my early investments, in my seed investments. Okay, valuation becomes much more critical down the road when we are going to expose a relevant amount of capital. Okay, for the time being, for the seed investments, it's much more about allowing the entrepreneur to feel comfortable in terms of dilution, for example. And so to me, valuation is, I would say, a secondary effect of two variables, which is the amount of capital that you are raising and the dilution that you are gonna or you are willing to undertake. Okay. For example, I would never recommend an entrepreneur to be more than 20% diluted on the seed round. Okay. So if I see dilution rounds north of 20%, sorry?
Excuse me, but you never recommend?
I would not recommend the entrepreneur to be diluted more than 20%, or the entrepreneur group, okay? The founders to be diluted more than 20% at the seed round, because after the seed rounds, round A may come and round B and so on, and you need to be on control of your company and you need to be owner of your company. So don't dilute yourself too much, okay? Now, let's take that magic 20% down. So essentially valuation is 4 times the money you need, because if post money is going to be 20%, pre money is 4 times the money you need. So essentially there is a correlation between how much money you are raising and your valuation. Okay, that's why I don't put too much emphasis on valuation. I would put a lot of emphasis on lowering the amount of capital that you will require to become a feasible product or a feasible business model. And that is to me much more worrying than the valuation. So I'm ready to pay a little extra as long as I understand that you are not going to spend too much capital. The problem is when from time to time we see managers that are needing $500,000 for the seed round and are already talking about 2 million for the A round on the very initial phases of the company. I mean, they either will ask for high valuations or they will be diluted to a terrible amount. So that is when we start to feel uncomfortable, but not for the valuation, but for the dilution. That's, to me, that's the harming. The harming is not the valuation, is the dilution. No? So what are the environments where we feel comfortable? We personally are not comfortable below 5% ownership, and we are not comfortable above 20% ownership. But that goes from the initial stages to the latest stages. So we will start by having, I don't know, 7 to 10%, increase to 10 to 15, and increase at the very late stage up to 20%. So whatever valuation allow us to move from those 3 levels is the valuation bracket that we tend to invest. That typically has been entering between 1 and 2 million. Below 1 million, we won't be able to deploy a reasonable amount of capital, diluting not too much the entrepreneur. So if a company is valued less than $1 million, it's probably not for us yet. It may be in a very near future, but not yet. If the company is valued north of 2 million and we are not yet in, it's probably a little late for us, because in order to gain more than 5%, I will be asked to put too much money on the table for day one, and I don't want that to happen. So it's somewhere around that. It's not hard. It's not box ticking. I have entered in companies at valuation for 100,000, and I have entered in companies at valuation 3 million. But typically, I feel comfortable between 1 and 2.
Okay, thank you very much.
What else? Yes, I mean, I would love to be more broad than just Cabiedes and Partners. Okay, I'm here to try to help you. So ask me anything you may want to ask about how we behave as an investor type, okay, not only as Cabiedes.
Okay, hello, my name is Rust. What do you think about the artificial intelligence service, and do you think it is a good source for investments?
Artificial intelligence.
Yeah.
Well, it's hard to answer because I'm sure there are way better investors than us in that field. I would presume that what you're looking for is for an investor that is willing to take technological risk on board, not only financial or commercial risk. We are not good at that. We will not expose ourselves to products that have inherent technological risk, and I would think that in IA you will have a relevant technological risk despite having some commercial activity already going. So that is a field where we don't feel extremely comfortable with, as long as there is tech risk. If you are, I mean, I am agnostic about the underlying product, so I can invest in e-commerce, I can invest in fintech, I can invest in e-services, I can invest in many things. But typically, I am happy to take commercial risk. I'm happy to take the growth hypothesis to test and take a growth risk. But I need to have a stable product, a proven product, and a product market fit before being able to deploy capital. And I'm unsure that on IA that is the case.
Yeah, but we built very innovation product in the new market. So what importantly, sales, customers, or products?
Well, it's actually the same. In order to have sales, you need products and customers. So I would ask you for sales, because if you validate sales, you validate product fit, product market fit, and you validate also, in a sense, lifetime value. So when we are as I said, when we are looking for sales, it's not that we are looking for the monetary value of sales, but we are looking is that the inherent validation that a sales brings in terms of product market fit and in terms of lifetime value. So for sure, if I need to center on one, I will center in analyzing your sales and how you have come up with those sales. Typically, we would be asking you to who you have sold, how have you sold that product, what is the margin, how much that has cost you to get that sales done, and what is expectable in the near future.
Okay, and last question about the marketing. We build marketing without money, using growth hacking. How to feel that?
I'm afraid
How do you
I
feel about
didn't get properly the answer. Can you repeat, please?
We build money using the growth hacking. How to feel about that?
Well, I mean, we love growth hacking. The question is, how do we feel about growth hacking? Yeah, well, obviously, growth hacking is great because, well, first of all, let's define growth hacking, okay?
Yeah.
Go ahead. Well, let's define growth hacking. If by growth hacking you mean doing financially cheap growth, we love growth hacking, okay? We look for growth hacking. We look for sources of growth that needs not to be pushed financially. So virality, network effects, member get members, all those elements and all the classical elements of growth hacking, we love them. And to the extent that you are able to deploy those, for example, virality is fantastic in any model, no? And when you see virality working, is beautiful, no? Because then you can push up the lever on marketing spend and things goes well, no? That is actually the ultimate proof of a business model, is to take away the marketing cost and see what happens. When we have done that and the company keeps on growing, that's a beautiful sign, no? So it's great to have growth hacking, but let's define what every one of us think about what is growth hacking. Because
Yeah,
if growth hacking is pushing money into Google or into Facebook in order to support growth, that's not any proof of anything. I mean, a monkey can increase sales by increasing the same account. That's nothing valuable. The valuable issue is to increase sales with not increasing cost of marketing. No? That's where things get interesting. No?
Yeah. Okay. Okay. Thank you.
Thanks. What else?
Sorry. Sorry, I didn't get it before. Like, normally, how long does it take you to evaluate and close an investment?
The true answer is the longer the better for me. Okay, let's be clear.
For you?
I have of course. I have no rush. I have never had any rush in closing an investment. Okay, the time is always in favor of the investor and it's always against the entrepreneur. I'm sure you agree with me on that, no? And that is the case because with timing comes validation. So every single week, you will have a higher validation of your model or lower, but at least more proof of that validation or not. Okay, and that is the ultimate risk reduction element that I can imagine. So I have never seen a risk reduction element higher than time. Okay, now people may say, yeah, but the longer or the later you enter, the more expensive you enter. That's also true, but I must say that I have never seen an increase in price equivalent to a reduction in risk by time. So there is no way you can, I don't know, multiply your price twice on a 6-month basis and still you won't be able to match the risk reduction. So time is always in favor of the investor. Now, the problem with that is twofold. First of all, by not stating your commitment, you can hurt the model or you can hurt the business case, and we try to avoid that. So essentially what we say is, let me analyze it, give me a lot of time, but don't wait for me. So keep on trying to raise capital and never wait for Cabiedes to take a decision. If you can out Cabiedes and bring somebody else in, please do it. So you shouldn't be waiting for us at any point. And that is the second part, the risk of losing the deal. No, that is a risk that we need to play. If I were not able to lose an investment, I wouldn't be able to invest because then I would be undertaking any condition at any price. So I need to be, by definition, more than ready to lose a deal, and I need to take some time to let things evolve. Okay. Now, how long is that process? Shouldn't be less than 3 months. Shouldn't be more than 6. Just to say, certainly not less than 3. And that being said, the longer the better. No. Now, the way to manage that is to approach your investors the sooner the better. I'm not saying that. I mean, we love when we are approached by an entrepreneur who is not asking for money. He's essentially presenting his project and asking us to come back in a few months' time. We love that, and I think that's great. You should be doing that with all investors from day one. So you should keep your potential investors up to date on what you are doing, which way you are going, committing to XYZ objectives. Okay. And certainly, if you hit those objectives, giving back a call and saying, I told you that I was going to do XYZ, I did it, I fulfilled my objectives, and actually I surpassed those objectives. And now, 3 months later, I'm now ready to raise capital. That is probably the best process to approach an investor. So don't wait for the moment when you need to ask for capital. Start talking to them before, keeping them posted. And to the extent that you are able to establish a conversation with no check included, the better, because we will feel way more relaxed if we feel that we are not being asked for a check than if we are asked for a check on day one. This is like dating, okay? You need to prepare before marrying or going to bed. So devote some time to that.
Thanks.
Okay. What else? You're not being very tough on me. Come on, guys. Venga. Darme un poco de caña. Come on.
Hi.
Hi.
I'm Maite.
do you invest alone, or do you use platform, or you have people who want to invest with you in the same round? And in the case of both, which do you prefer and why?
Okay, we never invest alone. Well, never say never, but we don't like to invest alone. We don't like to invest alone for several reasons. First of all, because at the seed round is where the risk is higher, so there is no risk of taking all the risk on me. I love to diversify my risk, and I love to be accompanied by co-investors, and we always do that. The second reason why we don't like to invest alone is because if I invest alone in any of you guys, you would be calling me every single day. You would be asking me too many things. I would be requiring too much time from me, to be honest. You need to diversify your sources of knowledge, your sources of help, your sources of financial support. So I am, as I said, I have now more than 40 companies on our portfolio between my brother and myself. And I honestly cannot devote too much time to any of those. So I don't want to leave my entrepreneurs alone. And I love and I very much try to bring more people into the table. Not only that, but also the fact that I believe that at the stage that we invest, business angels, true business angels, meaning the mentors and the guys that you may have around involved, are much more helpful to you than I am. Essentially, I believe that we built a very complementary relationship between true business angels and us, by means of which they will support you and help you and mentor you more than us on day one. But then as time goes by, you will require more financial support and less mentor support. And is in that second stage is when we jump in and we can, in a sense, supplement the financial capabilities of a classical business angel. So they will help us on day one, we'll help them in day T plus 10, to put it that way. No? So we will always co-invest with business angels. We love to co-invest with business angels. The second question was about platforms. We don't invest in platforms because, well, if I have done my job right, I should be able to have a reasonably sourced group of ventures to look at. So I don't require the platform. I'm not getting additional what is the name? Additional lineup of entrepreneurs by accessing a platform. Okay, I mean I'm 24 hours a day devoted to talking to entrepreneurs, and my problem is being able to attend them, not being able to look for new ones. So I don't need extra pipeline. That's the word. I don't need extra pipeline. So I have not seen yet the value addition of a platform, despite I have invested in one, by the way. I mean, we are key investors in Startup Explorer, which is a great platform. No? And the third question was regarding what was the third one? Sorry, I forgot.
No, it's all.
Okay, perfect. What else? Come on, guys, take advantage.
Megan, do you think the video is good tool for any business?
Which sorry?
Do you think the video is good tool for any business?
Sorry, I don't get you right. What is it good or not for any business?
Video. Yeah, we create the instrument for video. So I think. So I ask you, video for business. It's good too.
I'm so sorry. I'm afraid I don't understand the question. I don't know if you can phrase it differently.
Okay.
Sorry.
Okay. What do you think problem have our businessman in a process making video?
Our businessman in a what? Sorry for that. It's probably the quality of the line. No sé si alguien puede traducirlo en castellano y me lo dice y a lo mejor lo entiendo mejor.
Yeah.
Are you asking if the video is a good business tool?
The video.
Yes,
Video.
he's asking about video. Si los videos, hacer el negocio de videos es un buen negocio para invertir.
Wow, that's a tough question. Well, first of all, my business origin is a news media agency, so we are very much we are very close to the content business model. Okay. Now, one of the reasons why we invest in in internet startups is to diversify away our content risk. My family owns a news media agency in Spain, Europa Press, and as I said, we are heavily exposed in terms of patrimonial, wealth into that business. So we don't invest in content. Through Cabiedes Partners, we don't invest in content because we have enough of it. Now, that being said, I truly believe that we are moving to a more video content, web and mobile environment. Visual content is gaining a lot of ground versus written content, and I think that we e-commerce, for example, that are good at managing that visual presentation and that visual marketing are way better prepared for growth than e-commerce that are not. So I think we should all devote as business people and as investors, we should devote a very relevant amount of analysis into visual content instead of written content. I'm a clear believer that we are moving into an environment of visual content. Okay, now what does that mean for specific businesses? That is for you to decide. You are way better than me in understanding to what extent you should incorporate that into your business models, and what can you profit and what can you gain from that. But for marketing, for product description, for communication with your clients, and marketing channels like YouTube are gaining a lot of ground. So certainly video is a must. Mastering video is a must. What else? Sorry for my lack of understanding, by the way. Go ahead.
About the time you decide to be in a company. I mean, if you for you is better being in a company which return is going to be in the same year, or you can be or invest in one, the return could be in the second year, or you want to be leaving the company. How many times for you?
Yeah, actually, I think that question was asked by your colleague before and I didn't answer, so thanks for bringing it back. As an investor, what I do care about is about multiple, what I call return on me. So I don't care about internal rate of return. I leave that for the financial guys. I care about how many times capital invested I get back. Okay, and I'm perfectly prepared to wait 2, 3, 4 years, 5 if needed, to get my money back, as long as value creation keeps its pace. Meaning that it's not about I don't need to get out of the company at any time frame. Our funds are long enough in terms of timing to be able to create value. That being said, the key question is to what extent on year 3 am I creating as much value as on year 2? Okay, so as long as the value creation keeps on generating, I am a very patient investor. What things get a little bit more impatient is when you see that the value has been created already and you are not increasing that value creation as time goes by. Then is the time when, as an investor, we start thinking about let's look for an exit route out of this. Okay, so again, time is not a variable. To me, time is nothing. To me, is value creation, and that may happen in 1 year, may happen in 5 years. In the companies that we have invested or exited recently, Privalia took 3 years to generate that return. Trovic took 8 years to generate that return. Both were outstanding and both were fantastic, and none is better than the other. It's simply the value creation speed that what is important, not the distance or the time frame that we invest upon. That being said, this is a key question when talking to investors. You should be very aware that investors may have time constraints, and that is terrible for an entrepreneur. To get money into the company that has a time constraint is terrible, because that will put a pressure on you that you don't want. Okay, so be aware that some investors may have liquidity needs. And if you identify that, I would recommend you not to take that money, or to be sure that you will be able to answer that liquidity needs, because we as an investors can become quite nasty as a collectivity. Okay, we try not to, but we have seen investors get very tough and very rough on investments because they didn't get the liquidity they were promised on day one, and that's terrible. We have seen a lot of problems arising from that. So be sure that you will be able to deploy capital at a pace where your investor is comfortable enough, and you should discuss this with your investors before letting them in, because as I said, committing to a specific time frame is terrible. You will have problems for sure.
Thank you.
Un poco de caña.
Venga.
First thing, let's say I don't have the P&L that you are asking for, but what I need to do if I come to your office to get the deal?
You won't be able. Sorry for that. No.
Are you
essentially,
only
if are-
looking at numbers?
Basically, yeah. I mean, not only, but we need to be able to discuss on the numbers. Okay, we did invest in BlaBlaCar, for example. BlaBlaCar didn't have a revenue from the B2C model for many years, but they knew what to do, at what price, at what margins, what were the costs embedded in everything. Okay, they simply didn't turn on the revenue line because they had a B2B revenue line that were paying for the bills. Okay, but yes, if we are not able to discuss on what I call E con dos palitos, an E with two slashes, if we cannot talk on those terms, I'm not your guy. And I'm not your guy because I'm not a technical guy. I have never coded any single line. I'm not a scientific guy. I'm not even a good entrepreneur. I'm a much better investor than entrepreneur. So you need to show me something that I can digest. And the only things that us as an investors can digest are things that are investable. And sorry for that, but investable things tend to have an E with two lines crossing the E. No? So I think we need to be humble and to understand that what we understand and we don't. And I am not taking product risk. I'm not taking theme risk. I'm only taking commercial and economic risk. And that's, to me, as a Cabiedes Partners, that is what we can understand. So you either have it or are able to explicitly express what are those figures. Okay. So again, I'm not looking for the monetary value of the revenue. I'm looking for the validation. So I perfectly can invest in models that do not have revenue line, but they are fully validated. So that's to me, that's the key. No? No oigo. Le has quitado la... ¿Me oís vosotros o no? De repente se ha cortado. Yo creo que le has quitado el cable. Ahora. Ya. Vale, fenomenal.
Perfecto. Entonces, so basically, I'm not a developer. I'm a finance guy as well. Okay, so that's why I was interested in an overview on the P&L, because we don't have the P&L we're talking about, but we have the metrics to justify the forecast.
That is fine. Mm-hmm.
Okay, so that was my question. Thanks.
Okay. Mm-hmm.
Are you interested in some specific products or services now, or you are open to any kind of startups?
Okay, we are opportunistic and agnostic. Okay, so yeah, I'm. Let's put it this way, and that's why we don't invest in products. Okay, I invest in P&Ls. The beauty of a P&L is that it's the same for a service, a product. I mean, it's not the same, but the language in a P&L account is the same. So as long as that P&L is beefed up, to me the product is a medium for the P&L. So I don't need to understand the product. I don't need to buy into the product. I don't need to be knowledgeable about the sector. I need to see the numbers flowing, and so I'm agnostic and sector agnostic. Okay. Now that being said, for example, this come in waves, no? So we are seeing now a huge wave on financials, fintech, as we did see a huge wave of collaborative consumption a year and a half ago or 2 years ago. So it comes in waves, okay, and we identify those waves, and we see those waves, okay. Now there are two big waves. One is fintech, and another one is the last mile delivery wave, okay. So we are opportunistic. We do take and we analyze anything, okay, but there are waves that we like to play and waves that we don't like to play, as for example the case of last mile delivery. I think the unit economics are not clear enough to me, and it's not that I have not yet found my model, but I don't see that as economically feasible. I mean, if I see all the projects that I have seen so far on that specific field, numbers do not add up to me. So that's why I'm not interested in that field. But if someone comes with unit economics that are up and running and working, I'm open to have a look. So no agnostic, opportunistic, and no black places or black sectors. No, by definition, my shareholders agreement doesn't allow me to invest in arms, sex, and dating. Beside that, I can do anything.
Okay. Thank you.
I'm sure you are not selling arms, and probably not sex. So approximately all the rest, I can do it. What else?
Okay.
Si hay alguna pregunta en castellano también, o sea, como queráis.
O en Spanglish.
O en Spanglish, como el mío. Go ahead.
Como el mío también. Bueno, para que todos lo entiendan. Could you give us some advices of approaching to investor?
Well, first of all, my first advice would be to devote as much time in analyzing investor as the investor would have devoted in analyzing you. Okay, so there is no such a thing as an investor. Okay, we are all different. In Spain, we have a say that. Well, I don't know how to say it in English, but aquí hay de todo como en botica, no? Meaning that you in the investor space you will find everything from the most techie guys to the most stupid guys as us, no? So first of all, devote time in analyzing who we are, what we look for. I think people are what they do and not what they say. So essentially, have a look at the portfolio and see what they are looking for. Okay, so if you look at my portfolio, you will see the things I invest, or you will see a kind of underlying theme of simple B2C understandable models. Okay, if you see somebody else's portfolio, you will see more kind of global ambitions portfolio. Okay, so devote time on analyzing those investors. Ask them a lot. We love when we sit with an entrepreneur, and at the end of the meeting, you soon realize that most of the time you have been answering instead of asking questions. That is great. That is a great sign of empuje, or I would say proactiveness by the entrepreneur. A great sign of the entrepreneur looking for entrepreneur investor fit, which also needs to happen. As much as you need product market fit, you also need investor entrepreneur fit. And it's great when from time to time we get meetings where a relevant amount of time is devoted to analyzing who you are, what you do, to what extent you can help me. And then take everything we say with a pinch of salt, meaning that, as I said, people are what they do, not what they say, and investors tend to do very little. Okay, so and we certainly do very little. So don't believe that we are here to help you. We are here to make money, not hurting you. But we are We are not mentors. Okay, we are investors. If you look for a mentor, go for Bolt. Okay. If you look for an investor, you're looking for his money, and he's gonna ask his money back. And don't believe that we are non-profits. We are tough. for-profit ventures. And as I said in Spanish, we are like cats. We feed your house with feather, okay? So with con pelo, ¿no? Os llenamos la casa de pelos. What I mean is that investors are not, sorry for my English, no son innocuous, no? They are not, we are not harmless, okay? We are present, we are demanding, we are not, I mean, you will know where we are, and don't expect that we are harmless, okay? We are demanding. So if you don't need us, don't even call us, okay? Or let's put it this way, call us in only if you strongly need us, okay? And be aware that we would be demanding, and be aware that you may have, I don't know, 90% of the company, but you have lost, I don't know, 50% control, okay? So don't be naive in talking to investors. We are not naive. So don't allow yourself to be naive, okay? I don't want to be too harsh, but from time to time I see entrepreneurs who believe that we are there to help them. We are not there to help anyone. We are there to make money. So I mean, let's be clear on that, no? And then don't rely too much on what we say, because we say many things but we do nothing. And on the contrary, entrepreneurs tend to say very little but they do a lot, okay? So believe on what people do and not believe on what people say. Okay? Am I being too strong on you? No.
José, perdón. Decías que tenías que terminar a las 3. Nosotros prisa no tenemos, es por ti.
Espera, no te digo. ¿Qué decía qué? ¿Qué decía yo? Si he dicho algo lo he dicho mal, seguro. ¿Qué es lo que decía?
No, hombre, no.
Que me comentabas antes que tenías que marcharte a las 3, que nosotros prisa no tenemos.
Bueno, venga, pero una pregunta más. Venga, un par de preguntas más. Si es que la verdad es que me parece que es muy interesante esto y es una pena que dure poco, ¿no? Pero venga, hasta el cuarto me tengo que ir. Dime.
Hello. I would like to ask you about, I'm developing a platform in e-health, and I saw you invest in Salu. What was the name? SaluSpot and no, MedPrivé.
And also MedPrivé, now called Clinic Point. Mm-hmm.
Okay, I if you can, I wonder if you can tell us something about how do you validate that platform. I was interested in MedPrivé. Like, you can change in the hospitals or in the clinics.
I think. No? This investment is a clear example of some things that we have been talking in the past. Okay, and it's an example of a product being a medium for the PNL. Okay, I know nothing about fintech, about e-health. I'm not a doctor. I'm a civil engineer. And when I saw MedPrivé, and my brother, I mean, we both of us saw MedPrivé. What we saw is a beautiful lead model. Okay, we were investors, and we are investors in Habitissimo, which is a lead model for plumbers. We are investors in Banquimia, which is a lead model for financial products. And these guys came to us and said, well, I have a lead model on doctors, okay? Honestly, I don't quote me wrong on this, but I didn't really care if they were doctors, plumbers, or bankers, okay? It was a beautiful lead model because the customer acquisition cost was many times lower than the value of a lead. Because in the medical space, many medical interactions are cost or are valued at thousands, okay, 3,000-4,000, and therefore a clinic is willing to pay hundreds for a lead. So that's what it really interested me. Let's put it this way. It's clear that Clinic Point is a e-health model, but that to me is irrelevant. To me, it's a model whereby the customer acquisition cost is way lower than the lead that we sell, and that's the beauty. So it's a clear example of me looking at the P&L, not looking at the product. Because if I were to look at the product, many jokes, I can imagine many jokes to say about Clinic Point, but essentially I'm not a user of Clinic Point. I don't even understand why people use Clinic Point, but that's not my problem, okay? The problem is that I see every day on a monthly basis that people use it and it's very profitable to us. So let's go for it, okay? Investors, we are like that. Don't believe that the investors buy the product, okay? We don't buy the product. We buy the economic element of the product, okay? Sorry for not being more explicit, but that's I mean that's essentially how I see it. What else? Bueno, nada más. Pues si no hay nada más, no sé. Oye, daros las gracias, ¿no? Many thanks for you being there at lunchtime. It's a pleasure. I understand that you're gonna talk with my partner Luis on Thursday or Friday. Is it the case? Okay, be more harsh on him than you have been on me. He's I'm sure you will enjoy it. And feel free to ask anything or to get in contact with me, and to the extent I can, I will be more than happy to answer doubts. And again, downplay the value of your investors and upplay the value of the entrepreneurs. That's to me that's the key. Okay, we are way less knowledgeable and less capable than you guys. So you are the scarce resource, not us. So be harsh on us. Okay.
Okay. Thank you for your time.
Nada, muchas gracias. Venga, chao. Nada, a vosotros.